Hey guys, welcome back to this week's video, and today we're going to have a really good look at volume profile and how we can use that in both our trading and also just to sort of help us understand how the day is unfolding. Because if you're pretty new to this type of trading, you might be looking at the screens and you might still be quite confused by just staring at the order flow. And fair enough, because it is really quite confusing if you're pretty new to this style of trading. So what we're trying to do with the volume profile is not only help identify good areas to enter and exit trades, but also it's going to give us some context for the day. So we can quickly sort of look at the volume profile breakdown of the day and say, look, this is going to be a good day for us to trade, or this is not going to be a good day. And it's really going to help keep us out of our own way in some ways, because it's going to help us identify the most high probability days that we're going to be able to trade to have the highest success. And at the end of the day, that's what we want. We don't really want to be involved when the day is not suitable for trading, when there's no one involved and our trades are sort of going to go nowhere. We want to be only in the markets when we've got the best chance of success, because that's what the business is all about. If there's no volume and no one's active, then we don't want to be there. We might as well just take the day off, turn the screens off. We don't have to be trading. Remember, that's our big advantage as a retail trader. We don't always have to be trading. So that's why I really like volume profile, and it's just really helps helps us understand the best way to go about it. So I'm just going to quickly dive in and get started. So the conventional sort of way that people trade is they sort of look at charts, and if you do that, you're not really seeing the whole story. If you think about what volume profile is, it's really just representing the different price levels that we've traded at over the course of the day. So if you look at a simple candlestick chart, you'll just see there's a high, there's a low, and we don't really know where prices have traded. So the conventional wisdom might be that, oh, look, price has been sort of evenly distributed between the high and low over the course of the day. And you might think that it looks like a good old bell curve, the old sort of normal distribution. So we would, if you don't know what, is really going on beneath the market, you would think that maybe, imagine this is our sort of histogram, that price is evenly distributed perfectly in this kind of fashion over the course of the day. So there's the most volume has traded at the, between the high and the low, and only a little bit has traded at sort of the two extremes, the high and the low. So, and that's the kind of thing that people talk about when they sort of talk about finding pivot points and all this kind of business. And, I just don't buy into that, because, as we all know, in the real world, things aren't perfectly distributed at all. So, and I think we've seen that, through so many different areas of life, not just in trading. So we can't sort of buy into the fact that, the high and the low are there and then everything in between is just perfect, because that's just not the case. Because going on, through the day, there's always going to be this buying and selling. And you can sort of see this here when we take a look at a chart. If we're looking at the left here, this is just maybe a 5-minute chart over the course of a trading day, and we can see that if you're just looking at the chart, we can see what sort of historically has happened, like price has traded down and it's popped back up, and then it's down and it's up again, and it's sort of ground back and forth throughout the day. And that's probably about as close as we can get to a normal distribution of a day. And if we look at that on a chart, we can see that whilst there is a reasonable kind of bell curve, there's also these big sort of points where there's big indents here and there's big indents here. And basically what that's telling us is that, whilst, over the course of a day, we do sort of quickly, or not really quickly, but we do develop into a pattern that looks somewhat like a normal distribution. There's always going to be these opportunities where there's been buying and selling pressure, and we're looking for these kind of opportunities where there's a sort of disparity between the highs and the lows. So you might have heard this referred to as sort of high volume and low volume nodes. And if we look at a longer kind of chart, this is maybe a 60-minute chart over the course of a week, we can see that there are these areas of high volume and low volume. So, as trading unfolds over the course of minutes, hours, and days and weeks, price doesn't always trade, perfectly how we expect it to, like with a normal distribution. We see that it goes between these areas of high and low volume. So in this spot here, we can see that there's been quite a lot of volume and activity here. Down here, not so much. And the way it works in trading is that for whatever reason, price always gets sucked back towards these sort of high volume nodes. And that kind of makes sense to us because if we think about it, if price has historically been somewhere and maybe there's a lot of entries and exits in that place, maybe people have their stop orders there, price always keeps coming back to where it's sort of historically been before. And if that's the way I like to look at things, to look at big sort of significant levels, not so much on charts to trade, but I like to think about it as in terms of if price has historically liked this area, it's going to come back again and find its way back there. And in the same way with these low volume areas, price reacts quite abruptly in these areas. So when we get to these low volume areas like down here, price is either going to go straight through or it's going to stop and maybe turn and go back and get sucked back up to the high volume area. And we can never tell what's going to happen, but we can use that information to help us identify good points to enter and exit trades. So like I said, volume profile is really a good way to add some context to the day. Like I said, it's not the be all and end all as a tool in and of itself, but what we're trying to do is use this to set up our day and find high probability trades. So the first thing we really need to do is put in context the different kind of days that you're going to come across, and that way you can go out and sort of spot the different styles of day, and we can work out which days are going to work for us, which days aren't. So the first kind of day that I'm looking at is what I call a normal distribution day. So this is a day that's not really going to be great for us as traders. So imagine this is our little histogram. Excuse the bad drawing. I just wanted to sort of give you guys a bit of an overview of the different shapes. So this is a kind of a low volume day with no real direction, and personally I find this very difficult to trade because we don't really have any clear areas to enter and exit. Sure, we've got these low volume sort of ledges at the top and the bottom, but if you've gone through the intro videos, you kind of know that when price is near the high and the low of the day, there's a very good chance that it will test those highs and test the lows and it will break through. So if we're trying to get short here at the top and trade back down towards this high volume area, that makes it kind of difficult because we're not really defining our risk very well. And also there's no real direction in the day, so we don't really know if it's best to be getting short today or best to be getting long. It's really, really hard to tell. And like I said before, our real edge comes from the order flow and from finding these big traders. And the real hallmark of a day where there's big traders is that there's big volume going on. So on a day where there's low volume and there's just this really basic sort of shape, this normal distribution shape, that's not really going to be a really good day for us to be trading, in my personal opinion, because it's just not really clear and defined in terms of where our entry and exit points are going to be. So it's making it very, very difficult for us to get these high probability trades, and that's not what we're about. A much better style of trading day is one that I call a P-shaped day, and it gets its name because it kind of looks like a P shape. So if you think about how this would look on a chart, basically you'd probably see this kind of almost like a day that starts out low down here, it breaks up early and then it pulls back a little bit and it sort of consolidates in this area. So we open, we push higher, then it sort of finds a bit of a range throughout the day. And the range is sort of defined here by this significant sort of volume profile area, and this is probably where we started, and then we broke higher, and we sort of established this this area. And this is really great for us because it's really helping us define where our good entry points are going to be. And we can see very clearly here that there's going to be a bit of a volume profile edge here. So we know that every time price comes down here, there's going to be a really, really good chance for us to make a high probability trade. And also, we're a long way away from the low of the day. So there's not going to be that chance that price breaks to the downside. And, we've also been able to really identify our high volume area. So that's going to sort of establish a pretty good target in which we can use. So this is, a really, really good sort of sign for us if we can sort of see this P shape sort of defining itself over the course of the day. And, we're also going to see with this P shape, we're probably going to see good volume on the day because, we got that initial break higher, to push us out of the original range, which really indicates to us that there is good volume there. There's clearly an upward direction on the day because, price broke higher and, made new highs pretty early on in the day. So that's, they're two good signs that are really going to give us some, big advantages that this is a good type of trading day. And thirdly, it's really helping us to define our entry and exit points. And that's, what it's all about, especially if, like I said, if you're new and you don't really, you're still sort of trying to work out what you're seeing when you open up the order book. This is going to give us some context to help us trade a lot better. So what does this look like for us? Well, once we've established that there is this kind of P-shaped distribution over the course of the day, we can very quickly identify that, look, we're only interested at the moment in entering trades around this sort of volume profile edge. And then we also know that our target is going to be most likely the highest volume profile points, on our distribution. So we very quickly established what our target is, and we can set up, that's the sort of reward for our trade. So that might be 6 ticks, it might be 10 ticks. It's hard to say exactly because every day is different, but we know going in that we can define our range very quickly right here. If you've been through the stop loss exercises, you'll also know that, we can sort of set our own stop loss, which is sort of comfortable with our personality type and the way we like to do it ourselves. So, if we were trading something like the 10-year future, that might be 2 or 3 ticks. So in this instance here, we know if price trades against us 2 or 3 ticks, we can probably get out of this trade because it looks like it's going to break back down and break out of this range. However, if we see that there is buying coming in here on the order book and we see that the bid is holding strong and there's maybe 2 or 3 times the bid has traded at that price, we know that this is a really great entry and we can enter here, get long and be confident in our trade. We've got a clearly defined target and a clearly defined risk, and this is basically our bread and butter trade. So if you do nothing else with this style of trading, you can basically live on this one trade by itself. So this is this is the fundamental way of looking at the trading day, and this is a really, really good trade for you to start with. And I think everyone should be out there trying to spot this type of a trading day and look for those very clearly defined price ledges where there's a big discrepancy between the two price levels. And that's going to be your best start in your trading when you're starting out. So in the same way as the P-shaped ledge, we've got the B-shaped ledge. So this is really exactly the same, but this time we've got all the pressure to the downside. So everything is exactly the same, it's kind of just flipped around. So we can see the price has probably opened up here, it's pushed down early, then it's pulled back and it's sort of consolidating within this area. And again, it's giving us the exact same sort of setups, just the other way around. We've got good volume, the downward direction this time, but everything's clearly defined for us. So, these are going to be your 2 bread and butter setups that I want you to get started with. So every maybe 5 or even 10 trading sessions, you're going to get a day that's really, really directional and really, really strong. And that's okay because these are the kind of days where you can make a significant amount of money, because you're going to get trades that don't just sort of stop when they pull back, when they get to the high volume area. They're actually going to continue to go and push higher and break even higher. So if you look at this kind of a day, it starts out kind of similar to what a P-shaped day would be. So maybe we've started here in this range, and then when the day has opened, price has just gone bang and it's traded upwards, and it's pulled back and it started to make a bit of a range. And we've got that volume profile ledge established once again. We've got that high volume node as a first target. However, this is a really powerful trend day, and what that means is there's actually a lot of volume around. Maybe there's a lot of news around, and there's really just that strong directional bias. So what happens is that price doesn't just sort of stay in this range, it breaks higher. And after it breaks higher, it pushes up and it starts making another range up here. And again, we can do the same thing. We can spot our volume profile ledge, and we can try and take the exact same trade again. And this might continue to happen over the course of the day. It might just keep on pushing higher, pulls back, it consolidates, then bang, it goes again. And this might happen 2-3 times over the course of an hour or two during the open. And I call this an opening drive, which just really means that it's very strong in the one direction, and it's basically giving us multiple opportunities to continue to enter. And hopefully it's obvious, but on a day that's really strong and directional, we're only looking to trade to the one direction. So if this is an upward day, we're waiting for little pullbacks to try and target these ledges when price is pulling back and consolidating, and trying to not only target this high volume area node, but if it's a really strong day, we're going to be able to just get in a pullback and let it break right up here. And instead of making 5 or 6 ticks, we can potentially make 15 or 16 ticks, because it's going to push through the high and then push through up into the next area that it will sort of establish over time. And this is something that you'll get a feel for yourself. Like these kind of days come along, maybe once a week or once every 2 weeks, and they're good days for us to be involved with because of the high payoff, but they're not going to be as easy to enter or as clearly defined probably as the P shape or the B shape days, because those are sort of lower volume days, and price might come back and just pull back and perfectly touch them, and we're getting these high probability setups. These probably are less high probability in that it's a lot more active, and there's a lot more volume going through at every sort of price point. So it's not always going to be a perfect entry, and you might have to, if you've got a 2 or 3 tick stop loss, maybe it's worth pushing that out to a 3 or 4 tick stop loss. But at the same time, the reward can be much, much higher on these kinds of days, because you've got this potential to really, really break out and make a lot more money. So the thing that you have to kind of do is make that assessment, and the best way to do that is just to look at the volume overall on the chart and compare that to what it's been like over the last week or 2 weeks. If you're seeing after the first 30 minutes there's a huge amount of volume in the market that day, and there's also maybe some news around, then you can probably make a pretty good estimation in your mind. The price may not just stay in that range for the day, and it may continue to break higher. And look, if price is breaking higher, I like to keep on taking these pullbacks until they stop, until I'm proven wrong, and that can happen 3-4 times. And on these kinds of days, you can walk away with 20 or 30 ticks. So that could set up your entire month. That can be your entire month's profit. And as you get more advanced, you can actually trade multiple contracts and just purely focus on these types of days and just see whichever day is really the one that's in play for that day. If you read my book on trading news, that's what it's really all about. Looking for the markets that have the most volume and because you're getting the most bang for your buck with your trades. So I would really encourage you to sort of embrace these kinds of days. They're going to take a bit of time to, fully understand and work out, the best way for you to trade them. But the most important thing is when you're starting out is really to identify these kind of spots. So I've put together a bit of a process for you guys to sort of follow each day to, really come up with the best plan of attack so you can approach, the day in the right way. So I don't like to trade the very, very opening 30 minutes of a day. So if the market opens at, say, 10 past 8 or whatever it is, I usually will wait 30 minutes and assess the sort of style of day. So that's going to give me a chance to see if it's a really low volume, boring kind of a day that's nothing's going on, or if there's a bit of action early and price pulls back and we've established a P shape or a B shape type day. I know what sort of areas I can sort of focus on. Or if after the first 30 minutes we just see price just going bang, it's going higher, we've got a really strong opening drive type of a day here, then I know that, look, I'm going to just keep hitting this trend until it stops. So I like to make that assessment after 30 minutes. For you guys, it's really up to you. It's really good to sort of give that kind of time when you're new, just so you sort of stay out of trouble, because there can be a few catches. Like if you're on a day where there's some big news announcements coming out at, say, 8:30 or something like that, like a non-farm payrolls, well, there's not going to be much volume probably leading up to that. But after those news announcements, there may be huge volume. So the same sort of thing applies on that kind of day. So instead of waiting for 30 minutes after the open, I'll probably wait for 30 minutes after the news announcement to let that sort of establish itself and identify the kind of day that it is there. So like I said, stay away from those really, really low volume days. They're not going to be that, advantageous for our type of trading. Either look for, a day where there is volume and there's a bit of a range that's been established, like a P or a B, or look for a really strong trend day and try and hit that as hard as you possibly can and make that really count, because you've got some huge upside potential on those particular days. So after you've made the assessment for the type of day, identify the areas where you want to get involved. So identify the areas where there are little ledges, where there are low volume nodes or high volume nodes, because they're the spots that you want to be getting involved with. You don't have to necessarily sit there and stare at every second of the order flow if price is just sort of floating around in these kind of no man land areas. Only focus on the areas where, price is going to do something for us and we can clearly define our risk and reward. So like I said, we can identify good areas to enter and we can identify really good places to exit, and that way it's giving us the best chance, and this is sort of an objective way that we can assess our day, and we can sort of put a bit of structure to what is essentially this random kind of mess otherwise, and that's going to be really important for us. So once we've really established the type of day, we've established the areas that we're prepared to get involved with, then we can sort of hone in and look at the depth of market and spot those buying and selling. So like I said, once we've got the volume profile ledge or just those areas of interest, start using the depth of market and spot those buyers and sellers. So if we've got a P-shaped day, look for the bottom of that P range and find the buyers, wait until there's 2 or 3 times the order on the bid that's traded, and that's going to give you a really, really good entry point, and you should have a lot of confidence with that. And don't forget, add in markets that are in sync. So if we've got a P-shaped day and price is down the bottom of our P-shaped range, but the other 2 markets are also, like the 30-year and the 2-year are both breaking lower, maybe that's telling us that the bottom of the range isn't going to hold this time. But let's say those other 2 markets are actually holding really strong and we're at the bottom of that P-shaped range. That's probably going to be a really, really good probability setup for us. So all these things work in sync together. But the first thing is identifying the style of the day, identifying how much volume is around, and whether or not this is going to be a day that's going to help us at all, or if it's a day that we should basically just avoid and turn the screens off. And I don't want you guys to feel bad if you're turning the screens off, because not trading is, you're still making a trading decision by not trading. If there's no volume on the day and there's going to be no follow through because of that, there's no big traders around, we don't need to be trading. Just shut down the computer and go and do something else and wait for a different day. So, over the next week, make a habit of looking at, the first 30 minutes to an hour of the day and making an assessment of the day. So even go and write this down, like write down the style of day, identify the entry and exit points. It's a good idea to even sort of do a screen grab and, identify the points where you want to be getting involved. Look at what the other markets are doing and form the basis of your day and your trades on that sort of 30 to 60 minute period. So that way you've given yourself every opportunity to find the best probability trades. So that's all I'm going to cover today. Hopefully I didn't rant and rave again too much. If you have any problems, please contact me. I'll keep releasing more and more individual trade videos, and hopefully this will help put those kind of spots in some more context for you. If not, like I said, please get in touch. I'm more than happy to walk you through anything. At the moment, we're still just trying to work out this, these high probability setups. In time, we will add more and more sort of layers to this. But for the start, we're only really interested in looking for one or two high probability setups and taking them. And once we've mastered them, we can move on to other things. But for now, stick to identifying the best volume profile days that work for us, and you'll be doing much better than the vast majority of other people in your trading. So good luck, and please get in touch if there's anything I can help you with.